if you're feeling left out and you feel like there's no conceivable way that you can achieve the American dream through the income channel, the way that you perceive
Your
that
parents
prior generations were
others
able
did,
to
correct,
do,
yeah.
right? Yeah. Then, you can see how some would perceive that the gambling channel is kind of their only shot, right?
Yep.
And it's been enabled over the last couple of years, or amplified by orders of magnitude by the fact that, through fiscal stimulus, we've kind of fire hosed trillions of dollars directly into people's bank accounts. And so, we've got checking deposits still at near record highs, right? I think there's still $1.7 trillion in excess savings in demand deposits.
Let's just be very, very clear, though. That's all sitting in the pockets of Bill Gates and Ken Griffin at this point, as compared to the median American, right? The median American is now empirically worse off than they were going into COVID. They have more debt.
Sure, from a wealth standpoint and from an income standpoint in real terms.
Yeah, no, not just in real terms. I mean, like the actual nominal cash balances for the average American household are now below where they were at the start of the pandemic, forgetting inflationary components, which are somewhere in the neighborhood cumulatively around 20% for the flexible components of CPI that adjust on your day-to-day purchases, right? So people have unequivocally been put into a worse place. The unemployment rate for those with less than a college degree is now above what it was in January 2020. So we're now actually starting to see deterioration in the employment prospects for those who are not among the relative elite in our economy. You're starting to see.
In January 2020, we were pretty well near cycle lows in terms of unemployment rates for those typically underemployed cohorts, right? So you're referencing a pretty strong labor market data point.
Yes, but right, that low was a relative high that had only begun to retreat from the extremely high levels of the 1980s and 1990s towards the tail end of that cycle. And I could show a couple of charts around those dynamics, but in just the simplest terms, the demographic component of the baby boomers that drove the elevated unemployment in the 1960s and 1970s, that need to absorb a large number of new entrants every single year, that we were incapable of addressing through the growth of the economy, particularly with the restrictions that were placed on it by the Federal Reserve, that returned in a much smaller form with the millennials, right? So we'd already been going through that. The dynamics of underemployment, the dynamics of people graduating with college degrees and significant quantities of college debt, and then being unable to find jobs in their chosen field that allowed them to pay back their college student loans, for example, that was a very real phenomenon. Somewhere around 1%, it's a little bit less than that, about 0.9% per year unemployment increase. And the persistence of the higher levels of unemployment was simply tied to the entrance of the millennials into the labor force. That's now fully retreated, and is in part why we're seeing this persistent low level of unemployment, right? It looks much more like the 1950s, in which I could flip that on its head and say, the 2.6% unemployment rate or 3% unemployment rates that were common in the 1950s were largely a byproduct of women who had been in the labor force saying, okay, screw it, I can leave the labor force and go live with my husband and raise 2.3 children, right?
Which is why we still see record low participation rates in the economy. I guess
the irony is that they know this. So Lael Brainerd pointed this out, and others have pointed this out. The demographically adjusted labor force participation rate is at its peak, right? Like if we adjust for the fact that you have lower labor force participation rate amongst those who are above the age of 55, we are absolutely at our peaks in terms of what we should expect for labor force participation rates.